I'm really excited to be speaking with you today about all aspects of financial planning. We'll be looking at taxation issues, cross-border issues, and also relocating abroad, which we have both done ourselves. Before we dive into all of the details, would you like to tell me a bit about yourself?
So I'm Sadie. I'm a private wealth manager here at Buchanan. I'm originally from Derbyshire in the UK. Before moving to Spain, I was actually a qualified accountant for 7 years. So I think that really gives me a good understanding of the UK side, as well as obviously now my qualifications and becoming a qualified financial planner gives me the expertise in Europe as well. I live with my partner and my dog in sunny Spain. How about you?
I'm Richard, I'm 39 years old. I've lived in Spain for over 5 years now. I've worked in financial services for 15 plus years, and I hold 2 diplomas in financial planning. One with the CII in the UK and one with the Central Bank of Ireland in Ireland. I've used my experience and also my qualifications to ensure that I give reliable, honest financial advice to expatriates thinking of moving abroad. What is it you do for your clients, Sadie?
I've been in Spain for 5 years and I'm a cross-border specialist. So what I do is help with the complexities of moving to Spain, and also when my clients are in Spain, how I can help best assist them with their financial affairs. What about you?
I work from our Marbella office, and I specialise in giving financial advice to anyone thinking of relocating abroad or having moved abroad already. I use my experience and qualifications to ensure that I assess their current position to ensure that their future finances are set up in the most appropriate manner.
Yeah, I've got clients locally to me in Spain and also across the whole of Spain as well. We do cover all of Spain.
I myself have clients in Spain, but I also have clients located all across the globe, across 5 continents. I recently worked with a client who was moving from the UK to Spain. We had various aspects of his financial planning. He had various assets. He had bank accounts, ISAs, general investment accounts, pensions, and also other assets. We needed to look at careful planning because we needed to consider the taxation of investments, be it in the UK or Spain, and we needed to ensure that he had a financial plan moving forward that was appropriate for his new jurisdiction. We looked at various taxes, so we've got wealth taxes in Spain, we also have succession taxes, but also income and savings taxes. The treatment of various investments in Spain is completely different to the UK, and what we find is any UK investments may or may not be appropriate for a Spanish resident in future.
I found that the same as well. I think the most important part is really just devising a plan. You're wanting to move to Spain, let's look together at your finances. Let's devise a plan and a strategy of how you best move to Spain. I was dealing with some clients recently and I was helping them with putting them in touch with real estate agents, with their visa specialists, with local accountants. And that's all before we sort of step in. We've had that plan with them, and then we step in and we look at their investments and their pensions as well. It's a whole strategy, not just a sort of certain area of it. And we sort of help our clients with everything.
When a client moves from the UK, Sadie, what are the main considerations they have?
So I think there's quite a few things that you need to have a look at. You need to look at your budgeting, your cash flow. You also need to look at the timing of your move and when you look at selling your property, because that can have a really big impact on what your taxes can be in Spain.
I also think an important consideration is existing investments. People generally have ISAs, general investment accounts, stocks and shares in the UK. A lot of these structures are not suitable for a client who then moves abroad or moves to Spain in particular.
Yeah, what may be perfect in the UK and set up correctly for your tax purposes there is not always the best thing to have when you're in Spain. There's lots of different tax laws and legal laws that, are very different in different countries. Such as in Spain, there's 17 different autonomous regions. So they're a little bit like counties in the UK, but imagine every single county in the UK had a different tax law. That's how complex and complicated this is. And you need to be aware of what you're doing and setting them up in the correct way possible as well.
I also find timing is an issue as well. So for example, selling a primary residence could be more advantageous in the second half of a year for particular clients. I also look at pension planning, so there's certain types of pensions which may be transferable to an international pension, for example, which may be more tax efficient for the client. Certain types of pensions may be left untouched as they're better left as a UK pension, such as the civil service pension or the police pension, for example.
I think that's really important as well with what we do. We make sure that we look into what the client has, look into the details of what that pension is, that investment is, and see if it's still right for the client or not. It might work out that that is the right thing to hold, but also it might not. So we need to make sure it is set up correctly and looking into everyone's circumstances as a separate person.
I think that's an important point. We can look at their assets and their position currently, but we need to consider their goals and objectives for not only their personal life, but also their finances and their assets.
Yeah, people have different goals, don't they? And they also have different risk. Some people are in very different situations and their goals for what they want to do with their money is, upon their demise, for example, may be very different. And that's why we set up things so differently as well.
Very important point. Inheritance tax planning is an important consideration for not just the client themselves, but it can be intergenerational planning as well. So we look at succession taxes, we look at inheritance tax from a Spanish point of view, because the inheritance tax positions in Spain are very different to how they are treated in England, for example.
I suppose as well, with Spain, it's all the reporting, and there are lots of different taxes and compliant reporting that you have to do that you may just not know about. And how would you know about those without consulting advisors like ourselves that know that? That is what we live and breathe every day. We've been through it personally because we both made the move to Spain. So we've been through a lot of them complexities as personal people, as well as professionals. So not just our experience with clients, not just our qualifications, but our own personal experience as well. So I think the main thing really, I think is important, is to have a financial planner in Spain. So before Brexit, the UK financial advisors were able to passport their regulation and they were able to advise in European countries sometimes. But now, since Brexit, that isn't the case, and most financial advisors in the UK are not able to give advice over in Spain. But not only just the regulation side of it, I think it's very important to have somebody sat in Spain who has been through those same things as you, that understands the different complexities with the rules changing. Because in Spain, they change really frequently as well. So it's not just about having that qualification and being regulated, which is the most important part, but it's also about having someone with experience in Spain and knowing the differences.
You mentioned earlier that there are 17 autonomous regions in Spain as well. UK IFAs will generally specialise in the UK tax system. It's very important for a Spanish advisor to be well briefed on all of the 17 autonomous regions because the taxation systems interact completely differently than the UK tax system, for example.
So how do investments work outside of the UK?
In the UK, you'll be familiar with ISAs, general investment accounts, for example. In Spain, there are completely different investments available. We have things called Spanish tax compliant bonds. The underlying investments themselves generally work in a similar fashion to the UK, i.e. you'll be invested in funds or your ISAs currently. That works in a similar fashion in Spain. However, we also have currency issues where we could denominate the funds in euros, for example, rather than British pounds. There's also funds that have different objectives for an expatriate rather than a UK-based client, for example.
I think as well it's quite important since Brexit again that you make sure that what you are investing in is actually European through legislation and correct through the European side as well. Currency is a big thing as well. I think we offer investments that you can denominate in a different currency because it's quite important to have your investments in the currency that you are spending money in now. Say you're moving to Spain and you've got no ideas to return back to the UK. Would it make sense to change your money into euros? Potentially. I've recently had some clients that had an investment in sterling with ourselves, and what they looked at doing is they were checking the exchange rate. When they put the investment in, for example, the exchange rate was a lot lower than what it is at this point now. So what we did, they rang me up. We review this regularly on our reviews anyway, but they rang me up and said, we're comfortable now with where the exchange rate is. So what we did is we made it as smooth as possible for the client. We got those monies, we FX them into euros for them at a rate that they're really comfortable with and higher than when they were actually initially invested. So we do have products that you can change your currency within them as well, which is a really adaptable thing for our clients.
The thing with UK investments as well is they're set up for the UK taxation system. So people will be familiar with ISAs, very tax efficient vehicle in the UK, allows tax-free growth. That growth is now taxable in Spain if you're a Spanish resident. So we need to look at your current position, we need to look at the investments you hold and see whether there is a more suitable vehicle for them moving forward. We need to ensure that we are compliant with the Spanish tax authorities rather than the British authorities.
Yeah, that's a great point, Rick. And at Chase Buchanan, we really like to hold regular reviews with our clients. Sometimes client depending, whether it wants to be half yearly or annually. But it's really important to continue to review the client's situation and see if their objectives are changing. They might have different risks. They might have had a new child or a grandchild, and then their planning requirements do change. So it is very important that we get those regular reviews in place.
And it's not only the client circumstances, is it? It can be the Spanish taxation system, it can be product availability. The market is changing rapidly, so we need to make sure that we are updating clients regularly and ensuring that the products that they do have or the vehicles that they do have are still suitable for their circumstances, or if there's an alternative that is now more suitable for them.
I think that is really important. Communication is key. I think that's something we do pride ourselves on here at Chase Buchanan, that we do keep in regular contact with our clients, making sure we keep them updated of any legislation changes, and also just seeing what they're doing in their lives as well.
We also provide them with a weekly market update as well. So we have an investment committee here at Chase Buchanan who monitors the investment world and all of the available funds within it. And we update our clients, dependent on which portfolio they're in, as to how their assets and their underlying investment funds are performing currently. And we give them a little insight as to what our outlook is for the short, medium and long term. At Chase Buchanan, we pride ourselves in giving highly regulated advice. All of our advisors are qualified to a level 4 UK standard.
And also we do work with external solicitors and accountants to make sure that we've got the right knowledge in all areas as well.
I think that's an important point as well, Sadie. We work alongside clients' existing accountants, tax specialists, and ensure that we do come up with a holistic financial plan for them that is suitable for all professions.
I know previously you had a client that asked you to liaise with the UK advisor so that you could give them reassurance. You want to tell me about that?
Yes, so I've obviously got experience from working in the UK. I'm familiar with the UK tax system, I'm familiar with UK financial advice. I work in conjunction with their existing UK IFA to ensure the handover is completely seamless. They know their current position. I then do a full fact find and find out their current goals and objectives, look at their asset position, and we work together to ensure that the client is well looked after in the future for their new jurisdiction.
As you say, I think it's good to do that in periods where you have got a really trusted financial advisor in the UK that can no longer help you, but you give that seamless approach across. So that financial advisor can look at what we're doing and we're advising you, and we can make sure that that is a seamless approach of you moving to Spain.
Equally, we need to look at future moves for clients. They may think about moving back to the UK for personal reasons, financial reasons, whatever reason it is. Whatever financial advice we give to the clients, we need to make sure that that is portable to their next jurisdiction. We need to make sure that their financial plan is flexible and open and is not tying to one particular jurisdiction, because life is ever changing, as are finances. We've got 10 offices located around the globe, and wherever you move, we will have a financial advisor who is able to give you financial advice, depending on the territory.
So one thing that I think is really important is Spanish tax residency. And it's not just about your residency, but Spanish tax residency is different. If you spend more than 183 days in Spain, you are considered a Spanish tax resident.
An excellent point. You can also be considered a Spanish tax resident for varying different reasons. It's termed as your centre of economic interest. If, for example, your spouse, your dependents, or you have some sort of employment in Spain, your centre of economic interest can be considered Spain, and therefore you are liable for Spanish taxes.
There are lots of different taxes as well in Spain. So there's general tax, savings tax, there is wealth taxes, there's solidarity tax, and there's also something called a Modelo 720 as well. So there's a couple of things that I think we need to get into and just explain a little bit about.
General income tax being the most simple. That covers your salary, pensions and rental income on any rental properties that you may or may not have. It is very important to note that Spain also assesses your worldwide assets and taxes them accordingly.
So general income rates do vary between the 17 different autonomous regions, and they vary from approximately 19 to 50%. But again, each autonomous region, so like the counties in the UK, are taxed differently, so it's important to know that they are correct.
You also mentioned savings tax and succession tax, wealth tax. Do you want to tell me a bit about savings?
So savings income is actually a national tax, so it is not dependent on which 17 autonomous region you live in. It is the same across the country. It ranges between 19 and 28%, and that is for capital gains, dividends, interest, things like that.
The wealth tax we also mentioned, that can vary amongst the 17 regions also. So it's important to know what your allowances are in each particular autonomous region, because they vary drastically. Generally speaking, you have an allowance of around about €700,000 plus your principal residence of €300,000. So the wealth tax in general comes into effect around about €1 million of assets.
And it is worth noting, like you said, it is different in different regions. Some places it's been eliminated. And what now Spain have brought in, because some regions decided to eliminate it with their local governments, is something called solidarity tax. Because in Madrid, they weren't too impressed with them not paying any of these wealth taxes that the other autonomous regions were paying. So they brought in something called solidarity tax. And that is a tax, and it's for assets over 3 million. So it is at a higher rate, but it is, again, over the whole country because the different autonomous regions decided to eliminate wealth taxes.